Forex market manipulation explained. I'd like to start by saying once you know the truth, it's always obvious. Thank you guys for tuning in. My name is Dylan from ForexiaPro.com or Forex Investors Alliance, and today we're going to be talking about market manipulation in general, and especially what is happening around Bitcoin right now. But not just Bitcoin. This is all the different currencies. Everything, everything in the world that's based on a supply and demand is being manipulated and can be manipulated by mainstream media. So some of the topics we are going to discuss are cause and effect, why something happens and what is the effect of that, buyers and sellers. There always has to be an equilibrium here. There always has to be the same amount of buyers to sellers because there always needs to be someone on the other end. So I can't buy if there's no one that's willing to buy from me. Okay? So emotional manipulation via mainstream media. What is that? We all know the mainstream media is controlled by basically the 1% or maybe 2-3% of the population. It's they're puppets. They can be manipulated very easily through these banks. Basically, everything's connected. All the mainstream media outlets, they work for the banks. Okay, now once you understand that, you'll understand that the banks are in these markets for a profit, obviously. Who does the mainstream media outlet to? Who is the media for? It's for us, the retail traders. We're going against the banks. So the banks are feeding us information through the media, and then we're processing that into the market. And it can be whatever the banks want, whatever type of information they want to either withhold from you or put in your mind, whether it's propaganda or, like I said, whatever they want. Okay? It's up to them. So don't trust these mainstream media outlets. If you haven't done proper research on that and you don't know exactly what I'm talking about, you should probably look into that. Hedge funds and banks. This is what I was talking about with the mainstream media. Hedge funds and banks are the larger players in this game, the ones with the sums of capital that are higher than, obviously much higher than any of us, retail traders. These guys can be trading with accounts of millions, multiple millions, or billions of dollars. As we know, the Forex market is a multi-trillion-dollar market. So it's there's a lot of liquidity, you guys. Pump and dump. Now this is probably one of their favorite market manipulation games or types of concepts. And it works off of the cause and effect. Okay, all of this plays in to one big web, I guess you could say, of market manipulation. So The reason I have Bitcoin up here is because we can see a really good example of market manipulation going on as like right now. I mean, just a few days ago it was manipulated like crazy. So as we know, Bitcoin is a newer currency. I'm not going to talk a lot about it, but what I know is that it created its peak right here at right about $5,000. It almost broke 5 grand, but fell short of that. We can see the peak here where they trapped most of the liquidity at around 4,800 and then fell, and right around here is when China pronounced they're going to be stopping, or I guess regulating, Bitcoin in their country, or stopping some of the transactions that are going through. They're going to try and start to regulate it more, just because, as we know, the banks, or supposedly the banks, can't control or regulate Bitcoin. I don't know if that's true, but that's what they say. Okay, as we can see, the market, everybody started going crazy saying Bitcoin is crashing, whatnot. Really didn't crash. It was just a nice retracement here. Everything that comes up must come down. This is the law of physics. It plays out in the market too, because we have an equilibrium. For every buyer, there has to be a seller. So there's always that equilibrium. Now, it can obviously keep going up like we see here, but there's obviously always going to be those retracements. Goes up and then it has to retrace. Goes up and then it has to retrace. Okay? These retracements can be pump and dump schemes. Okay? So this was a perfect example of a pump and dump scheme. The peak was created here right around the time that China said they're going to stop regulating the Bitcoin transactions, or start regulating Bitcoin transactions. Bitcoin started crashing. Right about this time was when the CEO of JP Morgan said that Bitcoin was a fraud, and that anyone in his company caught buying or selling Bitcoin, he would fire, and he would automatically call them out for being stupid, and he would fire them. Now, this caused a chain reaction, as alright, here's basically a lot of mainstream media, started reporting on the cracking down of Bitcoin in China, right? Because there's a lot of Bitcoin mining going on in China right now. But other than that, we had JP Morgan calling it fraud, right? He calls Bitcoin fraud. What happens after that? The mainstream media goes wild. They go crazy. How many people have Facebook here? How many people are up to date with, Bitcoin or currency, have that on their news feed? You saw that. You saw your friends posting about how JP Morgan called Bitcoin a fraud. Yep. Why did he do that? He wanted to get a discount. He drives the price down via emotional manipulation via mainstream media. So when all these retail traders started seeing these news outlets talking about Bitcoin being a fraud, and this very high representative type guy saying it's a fraud, they took it seriously. A lot of them got out of their positions, especially people that have been, in since around here, or even down here when Bitcoin was, who knows, at its lowest point. A lot of people started getting out because you could see this was a very sharp move down. But what happened after that? Just as fast as it fell, it moved up. Actually, probably about 8 to 10 times faster. That's your pump and dump. This was actually a dump and pump. So, what do you mean JP Morgan got a discount? Yep, he actually bought Bitcoin. He probably bought Bitcoin right around here. I wouldn't be surprised if he bought Bitcoin right here. After boss calls Bitcoin a fraud, JP Morgan buys the dip. He is in the chart here, a list here for the most bought Bitcoins transactions, along with Morgan Stanley here. JP Morgan, Morgan Stanley. They both were in on it. And they both bought out the media as well. And now I wouldn't be surprised if you see a lot of media talking about how Bitcoin is going to be worth so much again. And it's going to be talked about more and more again, just to drive the price up. So that's how the pump and dump scheme works, you guys. It's relatively simple. It's a simple concept. Don't trust the mainstream media. They work for the banks, okay? They take your money and run. Now, let me show you guys that this happens on all pairs, okay? It doesn't just happen on Bitcoin. This was just a perfect example. The dollar, here we can see for the presidential election, when Trump was elected just a few months ago, actually. We can see the dollar hit its peak at about $1.5 or $1.6, right around here. Right here was the presidential election this day, this spike down. Okay, so it hadn't broken this high right here at $1.57 area. What kind of manipulation happened here? Everyone thought Hillary was going to win the election at first. So what happened was, or at least that's what the mainstream media, a lot of the mainstream media was talking about. A lot of the mainstream media was hating on Trump. They were, the media hated Trump. We all know that. That's where this spike happened. This spike was once a big red candle going all the way down to 95.7. Okay, this was once a big red block, big red candle. Then what happened? All of a sudden, the numbers came out, and turns out Trump wins. Like a half a second later, the market completely reverses. It took about an hour or two, I believe, for this reversal to actually happen. And this is a huge reversal. This is on the daily chart, you guys. So this was a few hundred pips. If you go on the euro, you'll see it. But yeah, it was a fake out to the downside to trap anyone selling in here, and then they drove the price up. But what is this now? This is what I like to call the Trump and dump. Now, I've been talking about this even before it happened. I said right here that the Trump and dump was imminent, and basically the dollar was going to crash. And that's what Trump did. It was the Trump and dump. You could see all this hype. Remember, he said, "Woohoo! Yeah, I'm president. Make America great again." And then he talked about all these great things. And then he talked about, he kind of went out of the scene a little bit. And then he talked about weakening the dollar for trade. Remember that? And then this is when, right around here in April, May, March, right in here is when all these retail stores in the United States all over start closing. Hundreds and hundreds of stores. No, not even hundreds, thousands of retail stores around the United States started to close right around here, and they're still closing. So that's why we see this big drop here, and that's why I call it the Trump and dump, because Trump was the catalyst. They needed, why did they break what retail traders call the resistance? Why did they break this here? Because there were stop losses of sellers up here that sold right in here and right in here. There's also buy stop orders of people that are buying Trump's crazy presidency, make America great again scheme. And they bought into that. And then you can see it rallied. It did rally for a bit, a few days. And then it stayed up here, consolidating, letting as many people buy into that trap as they could. And then you can see that dump. And now it's completely out of this range here. It actually created this big whipsaw, hitting both the stop losses of any sellers or buyers. So that's the Trump and dump, the pump and dump. These schemes that they use, you guys, you gotta understand it. You'll understand the market a lot more. And notice that I didn't use any indicators. That's probably the most important key that you guys need to understand. You don't need to use indicators. Indicators are for the blind. They're for people that cannot see what the market is telling them. Everything you need to see is right in front of you here. They're not going to they give you these tools to cover up the most valuable tool you already have, you're already given, which is the chart. The chart itself is the most valuable tool. Everything else All these indicators are based off of numbers. They're based off of averages. Averages in price. We know the market doesn't really have an average. So, moving on to GBPUSD. Here was Brexit. Brexit once again, we can see very similar to the dollar scenario here, where it created the double top here, this peak, these two smaller peaks, and everybody started selling there and placing their stop losses up here. Same thing happened here with the GBP US dollar. So you guys, once you see these, once you know the truth, you'll never be blind again. You'll never need to use tools for the blind. So here's the peak, the double top here, and then nobody thought Brexit was going to happen. At least the media was saying that Brexit wouldn't happen. And then what happens? It goes above and spikes just above the 1.475 area. This blue line. What's above here? The stop losses of the sellers. That's why they went up here. This is when you sell, when they take out the stop losses. Why do they take out the stop losses? Because they don't want you in the sell. They want all their equity. They want all their money in the sell. They want to be the ones selling. So they take you out and trick you so that they can put more orders in. Does that make sense? They don't want you. For every retail seller that rides their wave, they lose money. Now, it's obviously not going to be much to them, but if there's a lot of people that start catching on to this, it'll probably catch them off guard. Which probably will never happen because there's so much propaganda going around with indicators and all these different things that tell you when to sell or buy, and they're completely wrong. Most of them are designed to be wrong, designed to fail. So we can see right after the pump here, nobody thought Brexit was going to happen. Brexit happens, the dump. Then we can see same exact thing happened, but in reverse. A mirror. If you guys know anything about the occult, they work in mirror imaging or mirror reverse type things. They reverse everything, and this is what they're doing because psychologically we can't understand it. Or it's very hard for us to understand. So what happens here? They create this false bottom where people start to buy and place their stop losses in here. What happens then? This massive spike comes out of nowhere. No news, nothing. The media said that this was a excuse me. They said it was some type of bubble. I don't know. The media called it a bubble. We know what it was. It was a crash. It was well, obviously it was a crash. It was a spike to hit the stop losses of any buyers, because what are they going to do next? They're going to move up. That's exactly what they did. So here, to understand this wick here, why did they create this wick? Why is this wick so crazy big? We can see that they did not go past this wick. So any unsuspecting people that had their sell stops down here were activated and then never had a chance ever to get out at break even. Okay, so there's a bunch of trapped people down here that are probably still in sells as I'm speaking, that are just hoping that the GBP will crash again so that they can get out at break even. But you know, that's the retail trader mind. That's how we think, you guys, and they're using this against us. So once you understand this, once you understand their language, once you understand how these concepts work, you'll never need to use indicators again. You won't need to use support and resistance. You'll use it as a tool, and it won't use you. Okay? There's a difference as using it and it using you. Retail traders let the support and resistance use them. For example, they see this right here as a break in the resistance, or support, I should say. The candle broke support. What are we going to do? We're going to wait for the next candle to close under the support, and that validates the resistance. Oh, resistance is validated. This support has become resistance now, and now we can sell. Ooh. Alright, let me adjust my stop loss, put it up here a little bit. Ooh, okay. Alright, that's nice. Ooh, oh my goodness. Okay, let's put my stop loss a little bit higher. And that's what they do. They get you to keep moving your stop loss up and up and up until they just take your money. They know human psychology, you guys, better than you do, better than a lot of people do. So this is really just a graph of emotions in human psychology. If you guys start to understand that there really are no lines, these lines don't do anything, you know, they don't have any power, you'll start to realize that. You'll start to understand the market a little bit more. So I don't know how long this video has gotten, probably a little bit longer than I like, but anyways, I'm gonna start, gonna pause the video now, gonna say peace out for now until the next video, you guys. I really enjoyed making this video. Hopefully you guys enjoyed it. If you did, feel free to leave a like, subscribe, whatever, you know. Thank you guys for tuning in. Peace out.